Good morning. This is Sean Woland at the Woland Mortgage Team here at Cherry Creek Mortgage with your Monday morning mortgage message. Just going to jump right in and share my screen to kind of show you what's happening with the markets right now. Let's jump in here. We're kind of flat. So I'm going to go over what the averages are in just a second, but you see this slope downward, and this is not a good trend. This is not a good trend line. We are flat today. We're really trying. If you can see what we're doing right here on this mortgage-backed security candlestick chart, we're at this Fibonacci level. We're trying to bounce back above it, but we're stuck. So hopefully we won't continue to cascade down this trend line, which, as you can see, this trend line is pretty significant. Hopefully we'll get some sort of a relief here. But what is that? What are we looking at for rates? Where are we? Let's look at the survey right here, the Mortgage News Daily survey. 30-year fixed, we're at 5.15 with points. That's the mortgage survey for the nation. That's the average, 5.15 on a 30-year fixed at 0.40 discount points. That means a rate with no points is probably closer to 5.25. And credit scores, down payment, that all comes into to what actually gives you your final rate. This is based on kind of like the cleanest, best of the best, 20% down, 740 credit, that type of scenario. 15-year fixed, we're in the mid fours now. FHA's in the high fours. FHA is always a little bit better than conventional. It just has always been that way. 30-year jumbo, we're in the mid to low threes at 4.35. And ARMs are becoming a little bit more attractive as we move into the higher rate category. So if we have people that are looking to buy homes, but they're afraid of the rates right now, the adjustable rate mortgage is an option if they know they're not going to be in that house for longer than 5 years or 7 years. Or 10 years, because that's how long ARMs can be fixed for. Remember, the rate is fixed. It cannot change for 5, 7, or 10 years, and you get a lower introductory rate. So that is a possibility for some buyers. So keep that in mind. If you have people that are afraid of the rates, it's a good option as we move forward. So just keep that in mind. I also want to talk to you a little bit about the market. So everyone here is talking about a bubble. It really isn't. And here's why. We're witnessing something that's so unique to our market because we don't have enough homes to sell. And Freddie Mac announced, I'm going to read it right off, 3.8 million units are underbuilt right now in the United States. That means we are shy 3.8 million units for sale. The fastest builders can produce on record was 2 million in 1 year nationally. So that means the average of 1.5 million needed, plus 2. We would have to build 5 million plus homes just to catch up. So probably not going to happen anytime soon. So this housing crisis that I call it, because there's a lack of inventory, that's the real crisis here. It's going to continue. So we desperately need inventory. We don't need it too fast. We don't want every investor that's out there all of a sudden to throw all homes on the market at once. But we do know that it's still very competitive out there. And even with the higher rates, we're not seeing a meaningful adjustment to the volume of homes being sold yet. So it may take a while, but really, unfortunately, it has squeezed out those that are a little bit more financially constrained. It's squeezed them out of the market. Unfortunately, that the higher rate going from 3 to 5% does have a pretty significant impact on the lower income borrower, which is unfortunate. First-time home buyers are having a tough time. If you're not being able to go over ask, you're having a tough time. So that leads right into our over ask tool, our bid over ask tool. If you do have customers looking to go over ask, help them psychologically understand what it looks like after 5, 6, 7 months based on normal appreciation, how long it'll take them to recoup that over the bid cost that they are putting into their offers nowadays. So I have a little bit of motivation of the day, motivation for my Seanism. You do not decide your future, you decide your habits, and your habits decide your future. So have a great week, guys. Rates are continuing to slip, but they flatten out a little bit. Just say a little prayer that rates can stay low and we can keep our real estate strong. But the demand is still very, very high for real estate. You guys can probably see it on the street. There's still multiple offers on properties, even with higher rates. So keep in mind, it was a wonderful time, a wonderful period of time that we had rates in the 2s and 3s. But it was great to have. We're lucky we had it, but now we have to get back to normal reality. So enjoy your week. Have a great day. Again, Sean Woolen, the Woolen Mortgage Team. Thank you for everything, guys. Have a great